Hey, good evening everyone, or good afternoon, or good morning, whatever you find this video. This is Tom from Park Avenue Forex, your new best friend. Got some cool stuff for you guys and gals today really quick. I'm going to give you trend reactionary numbers for Euro Yen right hot off of the analysis pad, right directly to you, so that you can basically get a good understanding of what's happening in Euro Yen. I'm going to start to analyze this cross currency like I did with the sterling yen. Again, we kind of jumped in kind of late because we had a nice movement up from the 114.40 and to 127 where we are right now. Euro yen is showing a little bit of weakness. Now here's the thing. I know that I have internal biases to Euro yen. I think Euro yen should collapse. And now I'm looking at my analysis going, I know the analysis is telling me that. Thank goodness I have points to give out that will prove, if it's truly going to go down, it needs to do certain things before it does it. But, this is the point of being like, trying to be open and honest with yourself at all times. I always ask myself, is my analysis really saying it's going down? Or am I computing analysis to meet my biases? But I know that my analysis, the way that I do my analysis, is totally objective. It's not subjective. So that's where I'm safe. But anyways, that's just the point I'm trying to bring up. All right, so let's get on to the analysis of this thing right here. Hang on here. All right, so from 08/18 year 2020. It is 2:53 in the afternoon Alaska time. That would make it 6:53 p.m. in New York, and whatever that GMT difference is for you, whatever part of the world you're looking at this from. Okay, here we go. I got showing weak knee. Okay, so that's supposed to be showing weakness. I throw these things into the slide for anybody that wants to catch me making mistakes. There's something for you right there. It's showing weakness, not weak knee. There is a warning price at 125.35, and that's why I wanted to get it up. Well, okay, that didn't come out right. I wanted to get this video up as fast as I could because the Euro Yen is now like 125.75. And there is a trend degree warning price at 125.35, which is 11.125 degrees off of a recent wave pattern. That's basically what I do to determine my trend reactionary numbers. I have the calculus for weeklies, dailies, and certain measurements to pivot points that basically make up waves. And I say, okay, this is basically a warning. Okay. Resistance from where we are right now is 127.13. If I'm totally wrong, a close above 127.50 will drive us up to the upper level of 130.42. Okay, and then we have a new look there. Ultimately, there's some really fat resistance at 132.06, but I don't see it going in that direction right now. I see it heading down lower, but hey, like I said, these certain things have to happen in order for me to say, okay, yeah. So we got the first degree warning price at 125.35. That is a trend degree. That is not a trend reactionary number. I explained trend degrees in a previous video, basically like vibrational points inside of a bell curve, and they are calculated basically with trend reactionary numbers. Next level of support should be 124.97, not too far away from the 125.35. But here's the thing, this is where I could try to help give an idea of price action for people that aren't really accustomed to price action. Okay, maybe you just started in this business or this vocation. Okay, so let's say for instance the marketplace breaks 125.35. Okay, that's a warning saying, okay, market's showing weakness. Now, if it does not go down to 124.97, here is the scenario, and I can play it out in my head because I've seen it so many times before. Market breaks 125.35, travels down to 125.09. Bounces up off of 125.09 and trades above 125.35, going to like 125.45, 53, maybe 60. Okay, comes back down and sits around 125.39.43. All right, so it's basically messing around. There's a lot of to and fro going on. People are adjusting positions. All right. The marketplace is actually waiting for a leader to come in and do whatever they're going to do so they can follow. Wrong. Big mistake. You need to be able to calculate these things before. You don't want to follow anybody. You want to watch them do something and say, oh my God, that's a gift. They're bringing it up to 125, 70, and last price, was like, say 90 was the stop. You're coming into a sell envelope. It's a gift, So you look for reasons to sell. Okay, now if the marketplace was to zoom, through 125.80, go 126, 60, 70, 80. Now, 127, something's up. But I'm getting ahead of myself. So let's just stick with the first scenario. Breaks 25.35, can't go down lower, goes to 125.09, basically bounces up, trades back and forth. A lot of people get chopped up at this point. Okay, they're going to be selling at the lows, they're going to be buying at what they perceive to be tops or things going higher, and they're going to get hurt. It's best if you break 125.35 to wait for 124.97 to break, okay, or an upper level to be broken again, an upper pivot level, because that's showing, oh shoot, it's not ready yet. Market's just not ready to go yet. Okay, but here we go. 125.35 again, breaks down, goes below 124.97. Okay, maybe it travels down to 124, say 70. All right, then it bounces back up at 124.70, rallies up, goes like to 125, like 20, 25. Okay, and it settles. Now, a lot of times, here's a little trick for you, and you can go back on your charts and you can see that when a marketplace comes off of a high or rallies off of a low, all right, they're just opposite. But let's just use like it's falling off of a high, it's coming down off of a high point, and it makes a low. Whatever that low day's close is, that's a really important price, because let's say the market, like in our example, the market fell to 124.70. And it bounced back up. It rallied to 125, 25, 28, something like that. And then people sell it, and okay, they're right to sell it. You have some resistance up there, and the market comes down and it sits, and it only goes to like 125.03, and they're waiting and waiting and waiting, and it could be a day, But a lot of those shorts are going to square at 125.03 because they say, it's not going anywhere. I'm out. Okay. But if you look at what the low day's close was, I guarantee you, I won't guarantee you, okay, I'll say that a lot of times that the low day close was 125.03 or something, or very close to that. Okay, so once 124.97 breaks, there's the next warning. It's going down to 124.42. That's 15 degrees off of the recent wave price. Okay, further deeper down, that's basically saying if we close below 124.42, we're probably in the long run, okay, going to 117.56. Now it's going to play around because there's a point 123.64. It'll bounce around off there, go back up to 124, like 35, 40, 45, 50, then back down, and then eventually once it breaks free of like the magnetic zone, I like to call it, it's going to go to 121.40, and then it's going to be very, probably very weak and go down to 117.56. There you have it. There's my story. All right, and let's just watch the price action. I hope that helps you guys out. If you're really into price action, here's a little self-promotion. My new book, Tower Price, is coming out. For those of you guys that aren't familiar with me, I would suggest you get the book Tower Price. I will let you know when it's coming out, what website you can do and grab it off of. It's not going to be crazy expensive. It'll only be like $1,500 per copy. Just kidding. Probably going to be like, I don't know, $97 a book or something like that. And then maybe I'll do a little video series with it for a small, price more, whatever. I don't know. But anyway, I look forward to seeing you guys soon. And remember, enjoy the party, dance near that door.